What's going on, guys? Get started in a second. Let me just turn this background noise off. Give me a quick sound check, and we'll get started. All right, how about no background music, actually? We don't need the ambiance. What's going on? Long time no see for many. Just make some minor adjustments. Cool, welcome. It's just after noon New York time. I don't know where you guys are tuning in from, so good morning, good afternoon, good evening, good night. My stream deck's not on, but my stream deck normally has all of the market hours in other time zones. But for some reason, it's stuck on the screensaver. Anyway, get started in a minute. I just shared another link. Give me a quick sound check. Should be good. I haven't streamed in a while, so we'll just double check it either way. It's going to be a good stream. Hopefully it's going to be a good stream. We have a lot of catching up to do. I'm going to be doing a giveaway, so I'll give you some details on that. 'Tis the season, as we say. We celebrate Christmas. This is my favorite time of the year. They can't take that from me. But yeah, I'll be giving away Arkham platform access. So 4 invites and $100 in BTC. But we'll get into that in a second. Just make some adjustments. I'm currently short BTC. I was short the ES. I just closed that out. Yeah, I think that's it as far as positions go. But we'll get into that. Sound is good. Cool. All right, guys, welcome to the stream. If you're not a subscriber, make sure you hit the subscribe button, hit the like button, all of that. Making an appearance today. I have on my new Faraday button down. So I'm a huge flannel plaid button down kind of guy in the fall and winter. Every fall and winter, I seek out the best threads when it comes to plaids, flannels, and I feel like this is the best shirt that I've ever worn. I mean, how can you really fuck up a flannel or a plaid shirt or a flannel plaid shirt? But you can. You know, J. Crew has some nice shirts, but they shrink. And, you know, I'm either an XL or a large, depending on the brand. And this fits like a fucking glove. But caveat, these things are expensive. So hopefully I don't have to buy any more of these because they're like $180 a pop. Yeah, absolute highway robbery. But if any of you are interested in these types of shirts, I don't have a ref link for a shirt, so I don't know why I'm going into the shirt like I'm selling it. But I've never been happier with a shirt. As if that means anything. Anyway, if you're not subscribed, like I said, hit the like and subscribe button. If you're not in the Discord, make sure that you join the Discord as well. The Discord is free. I'm spending more time in the Discord. Get the stuff out of the way in the beginning. I will share the invite link right here. The brand is Faraday. But join the Discord. We're just under 5,000 members now. I want to lock it when we get to 5,000. Let me center myself a little bit. I want to lock it when we get to 5,000 because every so often there seems to be someone that is actually all the time, I should say. Whenever I ban someone who labels themselves as me, and obviously, you know, we're talking about scammers, they resurface. So in an effort to make sure that when I ban somebody, they can't come back in unless I approve them, I'm going to be taking the Discord private. Famous last words, right? For paid groups. But Discord is completely free. I'm trying to populate it with as much educational material as possible. Let me just adjust this because I think if I screw this, it'll stay tight. There we go. I'm trying. What the fuck? I'm trying to make it. Hey, how's it going? As populated as possible with educational content, the content from other people, from myself, all the stuff that you can find on YouTube. But as I always say, you know, the shit that I talk about, the things that I use in markets, I didn't create them, right? So what I'm doing with the Discord is, you know, creating this curated source of what I think is really valuable information. And the Block Roots course is now free as well. So the order flow and market profile course that I think we're going on 3-4 years now, that I created and priced extremely low to begin with. It's not like we made really any money from it, because I ended up just giving it away anyway to most people. That is completely free now, and all you have to use is your email address. And there's no like ref link attached to it. It's not like that kind of free. You know, we know that like on crypto Twitter, when someone says something is free, or they, you know, create a Discord or a Telegram, that, you know, it's not really free. They make you sign up to one of the exchanges they promote, and then you get access to it. I share Phemex, so I am partnered with Phemex. I've been partners with Phemex now for, you know, since the beginning of Phemex, which I think stands for something. Phemex is a great exchange for alts, for BTC, futures, spot. So it's going to sound a little shilly, but they're one of the few exchanges that came out with not only their proof of reserves, but their Merkle tree really quickly, as well as liabilities that you could download that are updated second to second. So this is all available to you if you're signed up to the exchange. The link is below. I think it's a very reliable exchange. Right now, there's a lot of opinions as far as exchanges go, and that link is below. It's Trade Phemex. It's also on the screen. There's a lot of opinions as far as sexes go. As far as CEXs, so centralized exchanges. But listen, they're not going anywhere. There's a lot of fear in the market right now, rightfully so, because we had the, as far as exchanges go, the most trusted and, how would we describe this? The most trusted and mainstream, I guess you could say, exchange, besides Binance. Completely robbed people. That's my opinion. My opinion is that Sam is an absolute fucking pathological liar. And you don't have to take an FBI body language course to determine that, even though he is the epitome of, poor body language while trying to maintain, obviously, a bullshit story. But anyway, all right. So I said that I'm going to be doing a giveaway during the stream. I have a tendency to, when I stream, especially after a long period of time, one, I don't follow script. I don't have bullet points. I always find that when I do have bullet points, obviously things go better. If I jot down some notes, I don't. I like to just riff. The problem is when I riff and I have a large gap between streams, I fucking forget things, like completely leave things out. I'll stream. I'll have the intention of covering something. I say, I'm not going to write this down this time. This is just like, honestly, this is getting older. You try to keep as many things on the back burner as possible and to keep them in your memory rather than using planners and, iPhone notes and things like that and just pen and paper. And then I'll get to the end of the stream and I'll think, fuck. When I started the stream, I was stressing that I wanted to touch on this and then I completely fucking forgot it. So I'm going to be doing the giveaway. This is how the giveaway is going to work. I'm going to give away $100 in BTC. All right, I'll make it 300. So we'll give away $300 in BTC. So there'll be three winners for that. So each person will win $100 in BTC. I was going to do this trivia wise, but I'm not going to do that. And I'm also going to give away platform access. So I have 4 invites left to Arkham. I don't work with Arkham. I was given access to Arkham. Excuse me. I'm just going to pour a little bit of my Pellegrino in this cup. I don't get anything for sharing this. I probably have a ref link. It's not in my, I don't think it's in my YouTube. This is invite only right now. But it's a sick platform. And I say it's a sick platform. I wasn't a huge DeFi guy. I don't know a ton about DeFi to begin with. I am a directional trader, tried and true. I do want to get to focusing more on, platforms and protocols, but here we are. We're at the bottom of the bear market, ideally the bottom of the bear market, or on our way towards the peak of bottom. And most of this shit ended up being garbage anyway. So if you did any kind of major fundamental analysis, it didn't really get you anywhere. But paying attention to the flows in this market, or paying attention to, or knowing your way around Etherscan, or knowing your way around, the different protocols and how to identify activity in those protocols, that's not in my wheelhouse. But this platform definitely makes it seem a lot more interesting. And I'll just give you an example. So, and then we're going to get into the charts. So if I just go to Explorer, this is just going to pull up recent activity. I'm not going to pull up any of my addresses. We're just going to click on an address. So we're going to click on this address, more recent transaction, and you can see all the things that it pulls up. So there's really nothing for this address. So let's go to a different one. Maybe we have one that has a little bit more activity. Let's see. Maybe there's a more popular address. Entities, no. Go to 1 inch. Yeah, there you go. So you could see very quickly that this is something that's going to be pretty information heavy, right? I have transactions, inflow, outflow, profit, loss, counterparties for each address, obviously, and then the listed assets. The cool thing about this is, I think personally, right? Again, listen, I'm really late to the party when it comes to exploring Etherscan or doing anything with that respect, right? Most of my trading has been in BTC, ETH, more recently equity index futures, and then some majors, right? Some of the more popular narrative-driven pairs. But I never really got into like exploring the piping, we'll say. But if we go to, like, for example, we'll just grab this address, and then we'll go to Visualizer. This is what I think is really cool. You could just tag multiple addresses and see how they all interact. So we'll pull up another one. Copy, Visualizer. I guess I would have to have one offhand to pull up. But listen, it's an awesome platform. I'm going to give away 4 invites. That's it. So here's how it's going to go. At the end of this video, the video is going to get uploaded to YouTube. It's going to be on my channel. Leave a comment below. Leave a comment of things that either you liked, you didn't like. I don't care. Asking for some participation, some engagement. And I don't mean I'm directing it like you have to say something about the channel. Just leave a period if that's all you want to leave, right? Leave a single character, a single keystroke. The point of that is I'm going to be adding those comments, or taking this YouTube URL and placing that. Come on, let's try to stay centered somewhat. Placing that URL in this, and I'm going to be pulling those 7 winners from this video. All right, makes sense? Good. Now let's take a look at the charts. We're going to take a top-down, higher time frame approach first, because it has been a while since I've streamed. I think obviously you have to have a multi-time frame approach. Some of the levels that I trade off the most are derived from higher time frame market structure, major pivots in market structure, talking about weekly, daily, quarterly, monthly levels. Let me just see the chat real quick. So I think with the Phemex link, you're entitled to a significant bonus, which will reduce your fees. All right. Anyone else not able to get the Discord invite to work? Let's see. Yeah, so I don't know how that works, but how naive do I sound when it comes to like Discord or really anything outside of directional trading? With the Discord, we actually have a vanity link, so you could just search the stable. So search the stable, and that'll give you access because it's public. All right, so first things first, top-down approach with BTC. We'll take a look at ETH. We'll take a look at the ES, otherwise known as the E-mini S&P, which is obviously a derivative. It's an equity index future for the S&P 500. We'll take a look at APE because I'm out of that. I shared a long yesterday. We'll take a look at Link. Take a look at the dollar, take a look at Doge, and that'll be it. Hopefully we'll run through this all in a reasonable amount of time. So first things first with BTC, high time frame chart. Again, I'm not someone who feels the need to go over this stuff all the time, but it has been a while. The first notable thing that we see, the areas that stand out rather, first in market structure. Area of balance, right? Range bound market, bracketed market, clean highs, clean low, sideways activity, right? Leading up to that, a one time framing market. If we look at, this is on the monthly chart. If you look at it on the weekly, it's basically the same thing. Only time when it's not completely one time framing is if you look at it on the daily. By one time framing, when I say one time framing, that's a market profile term. Means basically one time frame is in control, one side is in control, whether it's longs or shorts, whether it's buyers or sellers. It's a fancy way of saying a trending market, where there was not a lot of two-way trade. So one time framing market looks like that, right? Two-way trade looks like this. And a one time framing market on profile is going to have these gaps, right? Periods of value, followed by imbalance, followed by brief periods of value, followed by imbalance. Whereas an area of two-way trade where the market is not one time framing, where it's bracketed, when you're looking at a profile, is going to look what? It's going to look more balanced. So anyhow, the two areas that stand out on this chart as far as areas where the market was experiencing a ton of two-way trade, and this is going to be like pretty general, right? I'm not worried about identifying any key levels on this chart, in the way I'm drawing it at least, are these two periods, right? So that leaves us with this gap where value was not really established. That's the point. Value was not really established in that gap. So we're looking at a monthly chart, right, that broke down outside of this. This is like a multi-year consolidation at that point, accepted back into a period where there was no real two-way trade, where the market was, you know, in this case, driven by buyers, or buyers were in complete control on all of the time frames for the most part, unless you're trading, you know, intraday, very low time frames. But now the market reaccepted into that level. It's sitting between the last area of balance and the next major area of balance. If you were to put like a profile on this chart, it's in the low volume region, right? So what does that mean? Markets will tend to fill out these regions if they accept into them, right? Some you might expect to move more quickly than others. So in the case of a more low time frame chart, accepting into a gap, accepting into a low volume region, when you pass like the ledge or the threshold from low volume to high volume, or excuse me, an HVN to an LVN. So when you basically accept past this point, intraday, intraweek, you would expect a faster move than higher time frame, right? Weekly, monthly charts. So what you end up getting is from this point down to this point, it's a high probability likelihood that this fills out over time, right? We're basically it's a fancy way of saying we're establishing value in an area that was not accommodative or accepting of prices previously, right? So, you know, if we have not been there and this is going back to December 2020, before we began to really put in this top and range, a lot of this is unchallenged, right? It's not to say that it's unchallenged, like that positioning is still fresh, but there was no real two-way trade there on the high time frame. So we're establishing value below this composite, above this composite. I mean, it would be completely reasonable for this to fill out all the way down to 12K. So just getting that out there. Now, if you look at this a little bit more zoomed in, this is a monthly chart, right? This is monthly balance for the most part. You have not inside bars as far as monthlies go. You have an inside monthly right here. But for the most part, the entire range was stuck within that month of July, right? And then we've now just broken to the downside. So, you know, systems normally would dictate, most systems would normally dictate that changes on the high time frame are much more important than changes on the low time frame, So this break in market structure is not something that you want to, reflexively fade. So monthly breakout for the most part, targets would be back down towards this, 12 to 14K region. Now we ended up hitting in the 15s. So it's not to say we have to go down there, but the point is, like, you can't, it's reasonable to say, I guess what I want to get out of the way is it's reasonable to say that these prices are probably in the realm of being attractive prices for the long haul. So meaning for, a year plus, 2 year plus view. But as far as like intra-week, intraday, and mid time frames, it's not, you can't say it's bullish, right? I think it's pretty clear. So we broke to the downside. You don't want to immediately fade this. If anything, what you want to see, you'd want to see that you're able to reaccept back within that range. So if we were looking at this range in its entirety, if we were just going to map this out from, let's say, a weekly closing basis or a daily closing basis, make it a little bit more high resolution. I mean, just to kind of encapsulate where we spent the bulk of time within the structure. You get the idea. It's whether it's the weekly or the daily, we're still looking at a clean set of lows, right? Market held this as support for multiple quarters at this point. We're 2-3 quarters. We finally got a very significant break through that structure. This is sort of the backside retest of this high time frame break. So anywhere from here up to here is reasonable to sell. From a contextual risk reward standpoint, it's reasonable to sell that level, and it's reasonable to expect that a lot of people would sell that level. And that if anything, that throughout the course of this structure, this is one of the better ways to look at it. This structure looked like a bottom, right? This structure looked like a clear accumulation period. So even with this break that took us down, much lower, it's reasonable to expect that there's people that still are holding underwater. And you have to start thinking in terms of, okay, if you're holding underwater from, 18.8, whether it's, weekly, right? Looking at the weekly chart, these lows right around here, 18.7, 18.8, or looking at the daily, right? It's all the same. It's kind of, we're just looking at this as a general zone. It's reasonable to assume that if you got in position there and you had this breakdown and you're still thinking, all right, this is, I think we're bottoming, but that's all it is, right? It's just but, right? So I think we're bottoming, but, if we get back to my 18.8 entry, like, let me get out, let me reevaluate, and let me buy back into strength instead. So a return back, and this is a one time framing portion of the market right here, a return back to this gap, it's reasonable to expect some kind of supply, right? Just because you're expecting that there's traders that are possibly still underwater, spot positions that are underwater that might split and reevaluate once the market moves higher. So significant overhead resistance, right? That being said, because of that, and we'll just put a profile on this to show you sort of where value is, I'll refine this so that this box is, one sec, let me get that box right there. This is where, and excuse me, let me change this because this is on the index chart. I use the index chart just to get the highest time frame chart, but we'll use where most of the trading is, price discovery is done, which is Binance. And then we'll set up this box to indicate the value area low and value area high, right? So taking this profile off, one sec. Okay. Here is your value area low. Here's your value area high of this entire structure. And then more importantly, you saw that POC is right there as well. Now, I'm not, listen, I took off the profile and you might be thinking, why are you drawing that line? Like it, wouldn't you want to know exactly where that POC is? No, it's just, the idea is there was a lot that was absorbed at these lows. Most of the volume was transacted around that, 19K, 18.8 level. So it's really reasonable to expect that upon moving back to that it's going to be sticky, right? That's the best way we could put it. It's going to be sticky. So because of that, honestly, one of the areas where I'm looking for major change would be right around this level. So, okay, so that's a level I want to focus on. That's an area where maybe I want to place an alert, because if the market comes back into this level, well, if it comes into it vertically and it's a, multi-standard deviation move, we have a move that's well beyond ATR, it's exhaustive. Well, that's different than if the market is able to grind back up here and hold this level as support. Any kind of squeeze to this level, I'd probably look to fade, right? So a vertical candle into this level, I would look for, what ultimately develops as a strong candle into the level, and then you get left with something like this, and then you have that wick and that failure to reclaim, and then maybe that is your opportunity to fade some kind of lower high off of that. But that POC, that value area low, if the market comes up into here, right, and is able to hold this level, and we're flagging, we're establishing, bid support there. Sellers are coming in, but it's being absorbed. Well, if anything, then you're probably looking at a move back up to 21.22, right? The point is, this was an unchallenged move down, right? So if you were to look at that sort of on lower time frames, so if we went, that's a 4 hour, but even on like the 30-minute, going all the way back there, there's really not a whole lot of structure, right? This is, if anything, there's single prints right there, okay? But there's not a whole lot of structure. So that's not going to be, that would likely not be the stickiest area for prices if prices were to accept back into that region. So, it's a long way from here. And that's why most of my focus right now is, I'm mindful of where we are off the highs. I'm really obviously focused on what's taking place with the dollar, because the dollar is just dictating everything. I am mindful of what these prices mean for my longer term views, but I don't want to get like overly aggressive with my positioning, especially when it comes to futures positioning. If anything, I have on the way down, even back down here, I added to a small amount of spot positioning. I have multi-sig for this purpose. It allows me to not be able to panic and sell, which is something that I do too, just like other people, right? If you have positioning that was just added and you add it at 18K and you add it at 19K and, it's sitting on exchange, well, if it starts losing the lows, I know how this usually works out, especially after we've been rejected from the highs multiple times and, the S&P is getting its ass kicked too. Why don't I just sell this, right? Wait for better prices. So we have a long ways to go and a lot of progress that we need to make in order for things to really change. If you look at this chart, what's happening is right now, and this will be put into better perspective when I look at XO in a second, is there's really nothing going on. So our threshold for what is actually significant is obviously dialed much, it's much lower. So, when we're going from being 100 plus vol asset to, a 50, 60 vol asset, your idea of volatility, your idea of relative volatility is going to change, right? So, you'll see in a second, it's pretty disgusting how tight and nasty things are. But the point of me mentioning that is, just take these drawings off the chart. This is where we are. It's like nothing going, all the activity, all the stuff that we've been talking about the last couple of days. If it's like a pump from, the lows up to 17, all these, all the activity we're talking about is right here. That's kind of embarrassing, right? If we look at this weekly structure, I guess the point that I'm trying to drive home is nothing is going on. We had an inside weekly structure right here. Things are really tight, right? That's as clear as day. All right, so let's get down to, so we know where the high time frame levels are. We know what levels need to be retaken for significant change to occur. I always prefer to buy into strength. So anyway, I'm short right here. So reason being, all right, prices in locally underneath this higher time frame structure, prices in a range, right? It's pretty clear if you look at the 7th through the 13th, or the 7th through like the 10th, the initial low, that is the 9th to the 10th, the initial low to the initial high. Price has been funneling within that structure with really not much effort outside of it other than this move to the low. So if you look at this from like a high-low standpoint, right, you can see these little periods of consolidation within it. We have these periods that I've indicated with composite boxes. So those gray boxes you see, those are two composites. But we're kind of around mid-range right now. If we were going to say high, low, and then mid right around this region. The transition off of the low, right, this structure so far on the way down, right, slightly lower highs. Talked about why this would probably rip up to these highs a couple weeks ago because there was a series of lower highs that were just marginally lower. You know, it was easy for stops to be placed sort of incrementally lower on the way down. And when you get a move that's against that and sort of counter that, it moves pretty quickly because you just blow through stops and have sort of a cascade upward. So now we have one rotation up over the course of a week. We have another rotation. And the top side of this structure is where we're finding support right now. I don't really like to see, right, that we're unable to test this high, right? So this is a 4 hour, but that level up there is a daily. That we're unable to get a test of that high, and instead we're rotating down after struggling up here slightly below that. So this level that we're retesting, it's reasonable to expect that this should act as support. But I just think that is kind of forgetting that by thinking so, I guess, granularly with, that didn't make sense. What's the word that I want to use? I'm kind of having a brain fart right now. I'd rather see that this made its way back up to the high before retesting the midpoint of this range, rather than putting in sort of this lower high, right, before retesting the level, right, and coming back to the retest at already. Ugh, Jesus, I need to take a drink or something because my mouth is getting dry and I'm getting tongue twisted. So what I see is two composites. We have composite, and where we are right now is kind of in the middle of that dead space, right? So we had a multi-week composite right here, just over a week. We have another just over a week long composite here where things are really clean. If anything, you want to see that these lows are consistently holding higher, right? Now, could this move be similar to down here? Yeah, absolutely. And that's why I think this is actually a reasonable trade to take, because being that we're between two composites, we have this kind of gap between them. It's reasonable to expect that the failure to accept back within this composite, right, so where value developed, would lead to the next area of value that was established over a long period of time, right? A long period of time being a couple days, week plus. So ultimately, this is a decently defined trade, because if we're able to actually re-accept within this value, I don't know why I was getting so tongue twisted before. If we're able to re-accept within sort of, 16.9, look at these local lows, right? If you're able to re-accept above there, then it's possible that we get some kind of similar structure that we had down here, right? Obviously, this move got a little further away. This one's a little tighter. So if anything, maybe this is a deviation. The point is, though, we're close enough to the invalidation for me to take this breakdown trade, because, there's reason to assume that momentum has kind of waned. We had multiple inside days here. So we had, we didn't have inside days. We had one inside day, but we had multiple periods of balance, right? To where a break from balance, the first major break from balance is something that you would expect at least one leg from. Now, could that be that this was the extent of it, and that was just to the highs of that previous structure? Maybe I'm being a little bit, my standards are a little too high for how far I think price has to go or what I expect of price. But at least we're so close to that if I'm wrong, I'm not that hurt, right? And if I'm wrong and we're trading back above like 16.9 and we're finding support, then I'll just look for the long, right? I'll look for the long back to the midpoint of the range and back to the high of that composite. So ultimately what I'm expecting is that this is going to break down, though. And you have to look at other markets as well, because I think that any kind of heaviness in the S&Ps, although the correlation coefficient is really weak right now, I don't know. There's not a whole lot of buyers or sellers in crypto right now. And I think that when the market moves sideways without activity, it favors people panicking, right? Or people, I shouldn't say panicking. I should say reevaluating their positions that they accumulated while thinking that we're at the bottom, right? This is a good bottom. Well, why not I just buy $500 lower? Or, I'll reevaluate $1,000 lower from here, right? So there's not a whole lot of urgency in terms of buyers at all. If we just look at Coinalyze, it was kind of weird that this Binance OI just completely nuked without really any activity. But the one thing that I think is pretty clear right now is the course of the structure. It's not like you had all spot buying and derivative fading. If anything, it was the opposite. We started to see derivatives get a little bit more aggressive, Binance selling, Coinbase buying but being absorbed. So Coinbase and derivatives buying but being absorbed, and Binance selling against this. So it's not, it doesn't look like it's going up on a really strong spot bid, and that kind of makes sense because the market is still in a significant period of uncertainty, especially when it comes to the DCG Genesis stuff, and then Silvergate recently, and there hasn't been a whole lot of clarity with those larger entities in this market that could potentially be bringing in more supply to the market, right? And I think if you zoom out and we look at this structure, it's a little bit more clear as far as derivative activity versus spot activity. This red CVD right here, that is your perp CVD. The orange or yellowish CVD, that is your Binance CVD, and then blue is Coinbase. Now, when I talked about volatility, so we'll leave this. So something else I want to touch on real quick. When I talk about volatility just falling off a cliff, this is our TPO chart for BTC. So really quick, those composites that I had boxed out, one sec. Those are from combining the last profiles, right? So we have multiple periods of value overlap within the structure. You have one structure where you had value migration higher, but you could see that most of the volume was done up there. That was your trap up at the highs. So you had that swing failure at the high. But locally within here, if you just combine these, so we'll merge these profiles, merge 1, 2, 3, 4, 5, 6. There you go. And then here's your value area low. Here's your value area high. And you can see this is where we're establishing value outside of that. Just to clarify that point earlier, if we're going to be establishing value within this prior structure leading up, right, filling out this inefficiency, you want to see that the market is unable to retake where this new activity has come in post break, right? So that's why I said this is a really good trade in the sense that, maybe it will end up being a deviation, but if anything, I'm so close to my exit and so close to what I think is a lot more clarity for some kind of long setup than if I was to get in this as it continued to break lower. But anyway, let's see. I'm making up words. Anyhow, this is what I want to point out. I just want to zoom in so you guys can see it. So I have one thing listed, and it's ATR. So ATR, you might see this listed as, if you're on Sierra, maybe average sub-period range, average sub-period rotation size. It is the ATR, so the average true range of 30-minute candles. So when you're looking at TPO, each, if we open this up and expand that, each one of these columns is a 30-minute period. So where price was in a 30-minute candle, right? So what we're looking at is when you're looking at ATR or average sub-period range, it's just the ATR of a TPO chart, right? And we know the underlying portions of the underlying columns in a TPO chart are based on 30-minute ranges, right? So it's a 30-minute ATR. So that is that is a measure of volatility, right? So if you're gonna create, ATR is useful to see whether or not the market is putting in a larger than expected move. You could use ATR levels, you could use ATR bands, you could use ATR to incorporate into some kind of volatility stop. But the point is, it's just a measure of movement, right? It's a measure of volatility, right? And in this case, using 30-minute candles. So the look back might be like 20-minute moving average or 14 or 15. I forgot what the standard is. But either way, it's showing you what the average 30-minute candle is within the day. So this right now is 45, 47. Even on a day, and this is like when I was talking about like, just put things in perspective, even on a bigger day locally, right? So looking at, this is going back to the biggest day in the last, the largest range in the last, what is that? Where's my scale down there? Hold on one second. I made a axis color. Yeah, what's going on? Candle border color. I will fix that some other time. Oh, there we go. You have to zoom in. In the last, what was it? 7 today, 1 week. Yeah, in the last 2 weeks. This day is the largest range, right? So that day is 17,255. The low is 16,300. So it's like $1,000 day. The average candle rotation within that, so the average 30-minute candle range within that was only 85. Like, that is gross, right? We're talking like, okay, so you have to put in perspective that at lower prices, those averages are going to drop. That's fine. But even if we were to go 3-4x prices from where we are now, this relationship has not decreased at parity with. So for example, at let's see, 50K BTC, right? The ATR, I think, was like, probably like 500 plus, 600, 700. You got to double check because I don't think I could pull up all those historical prices here. But it was very high, right? We're talking, the low was like $300. So we're looking at a big day right now where the ATR, the average candle range for that day, was 85. We're not breaking 3. We're not breaking 3 digits for ATR unless you go back to, the biggest moves down on the individual days, right? But even then, all the days between, right, where we're ranging, where prices, establishing value, where there's more two-way trade, you're not getting above like $100, which is, again, just an indication of how tight things are. So this is good, right? Because, compression leads to expansion. And you're going to see that after big moves, things taper off either way. But this is good to keep in perspective because if you're honestly, one way that you could look at this is if you are trading intraday and you capture a multiple of ATR. So if you're trading intraday, I might consider that if I capture 2x ATR in a trade, that's good, right? 3x ATR in a trade, that's good for a, individual scalp within the day. Might be less than that if we're talking scalp. But if you're talking an intraday swing trade, intraday momentum trade, if we're looking at days that have a range of, $600 and you're capturing half of that range on average, you're capturing 2 to 3x the ATR. Well, it's still decent. I mean, but it is obviously gross how tight things are getting. So I just wanted to point that out because that is something that you could look at just to get an idea of how compressed things are. But also, if you're going to place stops, if you're going to be, riding a trend, you want to keep an eye on ATR as well because this is sort of the expected volatility that you should incorporate into your stop placement, right? If you're going to place a stop below a market structure, a point in market structure, whether it's a low, or above a high, oftentimes it's good to incorporate at least 1 to 2x the lower time frame ATR if you're trading intraday outside of that level. So if I'm trading, if I'm going to play a swing failure off of this low, right, and that's around 16,640, some people will just place their stop right outside of this level, right? No, why don't you place it 2x the ATR. So if the ATR today is $50, at least a stop distance that's $100 lower, right? So at least you're incorporating some level of ATR because if the market comes down and it's 60 below that low, or if it's 70 below that low, Well, it's reasonable, right? There's no reason why the market has to stop on a dime. I mean, it's been moving on average this range for the last few days. So just something that you could think of when incorporating ATR for some kind of volatility stop. Give me a sec. All right. So that's BTC. See if I missed anything, if I want to touch on anything. I think I've touched on everything I want to touch on. It doesn't seem like there's a real spot bid, right? More derivative activity, obviously, anytime the talk of the bottom gets, you talk about a bottom, right? If I talk about the bottom being put in, right, I said I think we're going to get the low tick in Q4 and then up until Q2 2023. You talk about the bottom, it's a long period of this, right? So if anyone is thinking about the bottom as if it's just behind us right now, well, you get a bunch, you get a lot of derivative aggressiveness because people just think about the bottom as one point that we're leaving now, right? The bottom is in there, for anything above it is a good low to take advantage of. The point is we could come back down to the lows multiple times, and that would be completely reasonable over the next 2, 3, 4 months, right? So just keep that in mind. Some of the other levels you see on this chart, just real quick so that you understand. The daily, and then these daily ranges. I'm going to mark out those daily levels as well. So even though, for example, I have composites, and the composites in this case fit perfectly. So your value area low right here, value area high, value area low of these composites, right? In this case, right here and here, as well as here, they fit well with other daily levels, as other daily market structure derived levels as well. So as you can see, that dash line, that's from daily highs close, and then daily lows close within this range. Same thing, daily highs close in this rotation higher, and then down here, this dash line, that daily swing low. So daily closes, you're going to see that, they offer some good intraday plays, right? It's an area that you could look toward to determine whether or not buyers are in control or sellers are in control, right? Determine whether or not there's absorption or not. So always leave this level marked on your chart. In this case, that daily level is also a naked point of control. So if we look back out a little bit more, that daily close and that naked POC line up perfectly. So this naked POC, a lot of times if you see that the market is approaching it from a higher or low, this is going to be a sticky point. So extending this into the future, this being the highest volume traded point within the structure, and it being naked because we haven't come back to that level yet. So if you just assume that all over the chart, there's areas that buyers and sellers get involved, and if we leave that area and we don't return to it, someone is in better position. Yeah, maybe most of those positions have closed out since then, and we've seen a big turnover in that order flow. But there's also reason to assume that there might be some stale positioning, right? There might be positioning that is still left open, and that's all over the chart, right? So there's lower time frame levels you could derive based on just imbalances in volume on a footprint chart and extend the same consideration. But we're talking about a POC, which is the highest volume level that stands out. It's where most of the volume is done. It's reasonable to expect that if there are any areas on the chart derived from an order flow standpoint intraday, that the area where most of the volume took place for the entire day, if it hasn't been returned to, there might be some stale positioning that'll look to change positions or get out of position if we return back to that level. So just to put this in context, or give you a little bit of explain it like I'm 5. On the 28th, this 16.2 level was where most of the volume was done for the day. So since we haven't been there, you could assume that the best positioning that was put on here, or the most untested positioning, were longs, right? So longs were in good position until you get back down there. Okay. And of course, you might have had a bunch of turnover up here, so most of that positioning might close out, but there might be still some positioning that's hanging on for dear life that thinks, well, as long as we're above this level, I'm willing to hold on to it. And if you approach that level and you tap it, well, then at that point, You know, some of your shorts that were holding on for dear life will get out at break even, give you some kind of bounce. Or if you start to lose that level, right, some of your longs will sell out. So the point is, it's not to say that this is going to be major support or any of that. It's just that you could expect that the market might kind of accumulate around that region, right? Or if anything, it'll be sticky because of some kind of transition and positioning that was still put on. And based on people acting on knowing that that is a reasonable interaction to anticipate. Okay, so talked about BTC enough. So something just to be mindful of that I'm seeing on Bybit and Binance. At this low, market is moving sideways. Since the beginning of the session, it's been kind of one-sided in terms of selling. So locally, it's possible, right, that we have some absorption down here. But it is still a break in market structure. My point is, if we were to take, for example, this CVD, and we'll do, this is session already, and then this one should be session as well. It's been kind of one-sided down, right? So negative on the day, right? Negative on the day. Okay. Price is kind of flat, right? There's this weird gap in data right here. Prices are kind of flat, but where things are flattening out down here underneath that prior area market structure, at the POC, what is happening down there is open interest is going up. So I don't know if that open interest is going up because sellers are getting trapped under here. I don't know if it's going up because you have passive selling, right? So there's positions building under here based on activity getting trapped underneath the low. No real reason to try to assume too much right now because we are literally at the point of control of today. So this is the most fair value price for the day. So it doesn't make a whole lot of sense to have a really strong bias here. The benefit of this is since prices are clean, meaning this little flag after that break, this area above that has so far capped us is the ledge of the HVN down here. So high volume node down here. So if we were able to get back above, and again, that's why my invalidation is 16.9. If we're able to get back above 16.9, well, you definitely know that for whatever got involved down here that caused this increase, the better positioning is longs at that point. And if you're on the other side of this micro range, any kind of shorts that were involved, whether they were passive sellers right here or aggro sellers at the lows, being above that puts all of them off sides. So you don't need to think a whole lot, and you don't need to overthink because we're at the point of control. But because of that, and where all of this volume is coming in below that market structure break, if we're back above, I think it's reasonable to expect we slingshot. And as long as this maintains control below, it's reasonable to expect continuation. I'm short, right, because I thought this was a good area to find a trade. But if I was looking at this right now and I wasn't in position, or maybe if someone even closed me out, I might think twice about what I wanted to do and whether or not I wanted to wait for some kind of move away from the POC. Point being, like, for example, because it is so clean, right? So we'll put on like a 3-minute chart. Because this is relatively clean, if the market starts moving back below 16.78, 16.76, where the low of this rotation was, and where the lows is right here, because at that point we'd be back below, kind of decisively back below where most of the volume came in. So if you look at this low right here, that's where the OI started picking up. If that was OI based on absorption at the lows, right, buyers, they're starting to get put in a more painful position, right? So this is one of the things that I like to do is identify where the open interest began to increase and identify where that point was within market structure, right? All right. Let's take a look at the S&P real quick. So I still think, if one, I'm focused more on this now because I've been trading it. Been trading it terribly the last couple weeks. I'm just very distracted. I got a kid that's going to be born first week of January. I just started punting the S&P and punting the NASDAQ, and I hate to say it, right, because that's really lazy. I was staying smart in the morning, trading stupid end of the day, trying to manage multiple markets, and just trading very distracted. Listen, most people will know what they're doing wrong, and whether or not you stop doing it, that's up to you. But most people are well aware of what they're doing wrong. And for me, it's like, especially the last couple of days. I had a good session this morning. Some of the bad days that I've had in the S&P were phenomenal mornings. And then I knew, okay, probably a good time to stop now. And I continue to just overtrade. And then I would just get lazy and I think, I'm just going to punt this idea. I'm going to punt that idea. And I feel kind of gross about it now, actually, because at the end of the day, that's, I was up, I think in aggregate, like 40K and then down 57K. So I ended up just burning 17K, which is really stupid, right? Not a big deal in terms of my overall portfolio, represents a very small fraction of 1% of my risk. But the point is, like, it was just a fucking waste. And I'm kind of pissed off at myself for doing that. But listen, I think I have an excuse, although that's kind of making an excuse, right? But here is this is the daily chart for the S&P. Now, this is why I went back to Sierra. This is why I love Sierra. Yes, it's really clunky. It's not very intuitive. It takes a long time to, it doesn't have, it's got a pretty steep learning curve, put it that way. You have to spend a couple days with Sierra. But when you learn how to use it, I don't think there's any platform that ultimately offers the level of customization and capabilities. What you're looking at right here it might be pretty ugly on your screen, right? But there's a reason for all of these lines, and I know what they are. So we have VWAP, so quarterly VWAP, high time frame, right? So that's right here. That's quarterly VWAP. And then you have your 1, 2, 3, 4 standard deviation bands. So this is basically quarterly value. So if you could just think about that as the value area for the quarter. So we're holding the top side of value, really strong move off of the lows, right? Back here, we were talking about how even though there was a lot of chop in multiple streams talking about, all right, don't be thrown off because of any bullish moves at these lows. Unless the lows are decisively lost, we're just going to rotate back higher and play back towards previous areas of market structure. It was local high, and there was another weekly and multi-month composite area there as well. But then we have this blue line right here. That is last month's finishing or last quarter's VWAP. So we just extend that moving forward. VWAP is best thought of as where risk has been accumulated, right? Where most of the risk has been averaged out, right? So your volume weighted average price, like a volume moving average, just think about that as if you anchor it to an area market structure, if you have it based on the daily, if you have it based on the weekly, the quarterly, that is where most of the risk, right? So positioning is averaged out, right? So if you're above it, buyers are in better position. If you're below it, sellers are in better position. A lot of times, if you're far away from it, you'll see a reversion back to it, right? And if we come back to the level, whether it's from the highs or from below, because it's positioning, the same idea as naked points of control, returning back to areas of untested positioning, you're going to see the market offer a response. And this might be a response that is meaningful on the high time frame. If it's a higher time frame VWAP, it might be a response that's useful intraday if you're just scalping. So we are right now we have the first break in market structure. So we had lows, right, that were just broken, and this is that's yesterday's candle. Okay, now it wasn't broken decisively, right? So we had a swing failure up here. Break outside that range, failure to continue. Key area and structure from previous, this is going back to September. Pretty sticky area between 41 and 41.2, right? Significant move off of the lows. A lot of this, I think, good amount of this is trying to front run some kind of pivot. We're changing, policy. Obviously, not talking about returning to QE, but slowing the rate of hikes. People anticipating that December might be 50 instead of 75. Yada 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 yada. Bulls just doing anything they can do to sniff out some kind of change, right? Now, this is the first break in structure, but like I said, it's not decisive. If you look at it on the weekly, it's a little bit uglier at that point because it's an engulfing, right? So, we have last week completely engulfed right now. Now, this week, has days left in it. We're Wednesday. We have a couple days left before this closes. So a lot can change. But, if you look at it in terms of sometimes candles just kind of do tell a clear story, right? I mean, here's 3 weeks to struggle to get that much higher, right? And we just did away with it in 1 week, right? Or so far in the middle of this weekly candle. Again, it's not closed out yet. So the danger is looking at a candle like a high time frame candle, like a weekly or a monthly, and you're looking at the monthly on like December 7th, right? Or you're looking at the weekly on Monday, right? It's like this fucking could be the wick, right? And chances are, if there's no wick yet, it probably is, right? So there's no shadow up here. A lot of times, if this is a daily or a weekly and we have no shadow, that might be something that aligns my bias, or at least is something to note. Okay, it's more often than not if you have an instance like this, right, where there's no shadow at the high, and the market is opening up, and we have kind of back-to-back weeks like this, right? No shadow above it all, kind of equal highs. And then we're thinking, all right, you're probably going to have a throwback, some kind of stop run that leaves you with some kind of wick. But the point is, this candle right now is kind of doing away with all the progress we did the last 3 weeks. Market's cooling down, slowing down. It's pretty clear. Wouldn't be abnormal for us to see that this moves. If this is, for example, let me just hide some stuff. If this is a bottom in the making, right? I'll go back on the daily, those old contracts, so it's going to be ugly. If it's a bottom in the making, like, this would not be abnormal. Doing this for a while, right? Now that's going all the way into 2023. If I had to guess what this looks like, if we're going to say this is like the end of Q2, if this is kind of how I anticipate this to play out. Let me just line this up without getting fucked up on this. So we'll make this line up with, bear with me. Oh, Jesus. So here is Q1, January, February, March, right? And then May, right? May, June. So it's not going to scale and fit. But the point is, it'd be somewhere right around this margin. Come on. If anything, after this kind of break, like I said, now it's just shit's just fucking falling apart at the seams. Since it's not a decisive break and we're kind of just hanging out under these lows, I wouldn't be surprised, and I kind of would anticipate we put in some kind of lower high structure here if this is ultimately going to move lower anyway. Like, if you're bearish right now, the point is you probably want to, it's reasonable to expect, and I think it's probably safer to write this off if you're not already short and wait for something like this that fails and puts in a lower high, and you have some kind of lost momentum again below this high. And you've had this many times before where market structure has broken, and we've had throwbacks. See, I can't scale back because this is the December contract. Well, I'm in December contract, but it's not going to populate all the other ones. But you have something where, all right, this looks bad. Captures a bunch of shorts here. We're going into expiry soon, as well as the end of the year. So if anything, it's possible to have some kind of throwback here, and then maybe we resume from there. But this is all, again, I said this earlier, all of this activity in the ES. So just to give you an idea what the monthly looks like, because I talk about monthly charts that were early on. So we have 23 days left in this monthly. It's ugly so far. And you can see I have that level right there as being a really significant level. It's a green line. One sec. But it's a multi-month composite, basically. And that high is right around 41, 43. So I talked about 41 to 42. The idea is if the market gets above there, then, significant change has occurred. But what was I going to say? I'm losing my train of thought right now. What was I going to say? Oh, the dollar. Looking at the dollar in the high time frame, dollar topping. Okay. All right. But high time frame structure, it's reasonable to expect some kind of retest like this. Now, if you're looking at everything else that's taking place in terms of rates and where we are right now in terms of the Fed's timeline, all right, I get it. But right now, this area it's reasonable to expect that this would happen and we have some kind of throwback and this would act as support. So if anything, and this is a really zoomed out chart, right? Because we're looking at the dollar and this goes well back and this is not a shitcoin. Although some people might disagree. But multi-month, multi-year range that we broke out of, multi-year range that we broke out of. And then we have a retest of that. So if you're long risk right now, you just have to be mindful of this, because if the dollar finds support here, and even if it's topped, right, and you get some kind of pressure back up towards 109, 110, this is not always the rule, right? It's not always the rule that a strong dollar has to mean a weak equity market or risk is going to get punished. But it has been in this more recent regime, right? So my point is, this is a local thing, right? If we look at the dollar versus the S&P, it's not the case that there's been an inverse relationship, right? It's only recently. So you look at this entire period where the S&P marched its way up, there's been periods where the dollar's declining, the S&P is moving up. But then there's also been periods where the dollar's marching up and the S&P has been marching up with it as well. And this goes back to 2012. So it's not to say that we just have to expect that any movement in the S&P is going to lead to a counter trend or an inverse correlation in the any move in the dollar is going to lead to an inverse move in the S&P or risk. But that has been the case recently, and I think you have to go with your recent evidence because it is what it is right now, and there's no point in second guessing it. So, point is, the dollar has been moving off of this high. Maybe it's topping, right? Who knows? Maybe things are going to change in the next couple of quarters. Okay, people have strong opinions on that. I think if we are to go in a really ugly recession, right? If that's a lot clearer, then the argument for the Fed, loosening up by 300-400 basis points is stronger. But if there's still this like back and forth, are we in a recession? Job numbers good, job numbers bad. It makes that a whole lot less certain, right? Or trying to judge the Fed's activity. Just don't fade the Fed, right? The Fed, I've said this the entire year. There's reason to sniff out lower time frame changes. But as far as like the high time frame goes, you can just buy crypto again when the Fed reverses course, right? And you might be late, but you are going to be a lot more certain, okay? And the point is, buying a trend that's in progress in crypto almost is always better, right? Because if the market takes a year to bottom out and is putting in a massive range within that, let's say the market bottoms between 14K and 25K. That's a big range, right? Those are a big range of prices. So you might be thinking, well, if I buy now because I think the bottom's in, my 14K to 40K move or new all-time high is much bigger. But it's actually not a big difference, right? I personally, I like to buy into strength. So I buy a lot more when we move up than when we, stab lower. I buy a little bit when we stab lower, when we tap, prior levels of market structure that I think are reasonable to expect support. But as far as like major allocation goes, I like to be a trend follower with a majority of my portfolio when it comes to longer term spot positioning, when it comes to bigger positioning, that's usually just in spot anyway. And that means buying into strong markets. And listen, the truth is like institutional traders, institutions, they prefer to do that as well. They don't like to like just buy into these nascent new markets that are just getting their fucking asses kicked and are, you know, being questioned whether or not they're going to survive every other day. So my point is, don't fade the Fed. Yeah, like if you want to be this kind of like macro trader and you're playing on a maybe 1 day to a 7 day time horizon, you're, you know, playing along with narrative and these events that we have every month. Okay, and you're following every Fed member's speech and how the market responds to that. Okay, there's a lot of trading that could be done with that. And that might be, you might interpret some of those actions as fading the Fed, right? Because they're, you know, they've been one way for the last few months, but you're sort of fading these moves intraday and intra-week. But when it comes to like, don't fade the Fed big picture, my point is when the Fed says we're done, you know, we're done with we're at our target rate, or if the Fed was to start printing again, that's obviously ridiculous to think of right now. Like you could just kind of buy with a whole lot of certainty. And even if prices are a lot higher, well, whatever. I mean, it's a cost of your certainty, but at least at that point, you don't have to worry as much right now about every other change and gyration that's taking place. And one Fed member comes on and the market nukes, you know, 5%, and then another one comes on and the market looks confident again. And yes, I am bullish Bitcoin long-term. Absolutely. Okay. So the dollar is technically at high time frame support right now. So just consider that. And with the dollar, I think it's reasonable to really zoom out. One, you have the time, right? It's not like you look at a 3-month chart for BTC, a quarterly chart, and get a whole lot. You know, there's your next quarterly level down around 13.9, in between 10.8 and 13.9. But if you're looking at the dollar, it's really important to look at these high time frame levels. And I'm not someone who trades the dollar, but I am very mindful, obviously, of what's taking place right now. Okay, is there anything else I want to touch on? Briefly, I just want to go over Ape and just some ideas when it comes to alts. I'm not going to do any alt charts right now. I have Ape, I have Link. What I'm looking for right now is like we're in a point where we don't have buyers or sellers, right? The market is just, it's getting close to dead. Yeah, there's a bunch of tradable opportunities, but for the most part, unless there is, you know, someone is connected to FTX or there's a case where FDV is really gross compared to market cap and we still have those crazy multiples. For pairs where that's kind of tight and there's no like skeletons in the closet, if the market is basing out, it's possible that those markets are just basing out. And it doesn't mean that there's going to be a whole bunch of buyers that come in. Just the point is, if most of the selling is worked out and the markets are kind of finding fair value, it's not going to take many buyers to come in, honestly, to move these things 50 to 100%. You've seen that actually. There's been plenty of alts that have popped recently, but it's, you know, it's very short lived. What I'm starting to look at, and just going to, you know, for anyone who's been following long enough, it shouldn't sound new, is reclaims of higher time frame market structure. So Ape is an example. You have this multi-month range low, where this is a weekly chart, lowest weekly close before this decisive break. And now we're back above that weekly level. I like to see continued strength. So I ended up pulling myself out of this position. I think I ultimately had my invalidation back below. It was like somewhere around this low right down here, but I ended up pulling the position when we started failing at the high. But the point is, if the markets start to reclaim, if you have an alt that's done this for months and then breaks down and then does not follow through, but instead reclaims, well, I think that communicates a fair amount of information. And if anything, it's usually those that you see happen. So you see something like this, the market's been basing out. It's got a very clear range. It breaks down, fails to continue. And then you're thinking about this. And then as you're thinking, it's already at the center and then it's already thrown back. And it doesn't take much to do that. So I'm just trying to be as mindful as possible of things that are starting to look like maybe they've seen the extent of their selling, right? If I just go through like some other pairs right now that might look similarly, but not necessarily mean that they're setting up perfectly. So that's Ape. High time frame market structure reclaims, they tend to have a pretty high hit rate. So this might be an example right here. FTM. So weekly low and weekly lowest closes. And now trading back above. If you start to just see the market reclaiming higher ground and getting absorbed higher after a period of multiple months of pushing lower and basing out, after you have that break, I just think you have to start looking higher, right? Even if it's local highs. So it's not the best example. I mean, these are good examples, but they're already kind of pumped. And they're kind of extended from their lows still. So until they, so for example, I sold AGLD. Sold this initial move, or I was long and then I sold. I ended up capturing a pretty nice short out of this. I don't know if it was this or another pair, but this is probably not the best example, but the, where's the other one I just had? Hold on a second. Something like this. This is a really extended move down off of that range low. So again, point is that that's a weekly range low. I mean, even if you just zone it out, right? Box it out. It's a pretty extensive move off of those lows. So a move that's vertical into this level, same as BTC, is often a good sell. But at least we know exactly where the level is, right? If the market starts reclaiming something, and this is, I don't know what the fuck CTSI is, but I do know that if the market is not able to continue after a consolidation like that, after a significant break, and instead is back in, you just have to start looking back up towards the mid and the range highs. It's happened almost every cycle like this. Alts look like they could just keep going down forever, but at some point, you know, they've exhausted most of the sellers. And when it starts to drift back up in the opposite direction, it becomes very easy for it to move quite quickly, honestly. So, you know, you get stop runs like this. Some of them don't even give you a real chance to get involved, right? So, for example, this is, that's technically trading back above the lows. And you didn't really have anything, right? I mean, market's grinding against that. Now, if it's when you're at high time frame structure and you're doing this, honestly, that's usually not something that is bearish, right? Vertical move into a level is often a good sell unless it starts grinding against a level. So keeping that in mind, because there's a lot of charts that'll probably be setting up similarly. Let me see if I can find more. This is already failing. Now, one other thing you could do is also put on some kind of higher time frame moving average, like a 20 period on the weekly. And when you have that on, you get an idea of where things really change too. So whether you're back within range lows or back above that weekly moving average, I don't want to say bottom for alts, but I think we're getting close to a point where they're just going to be listless. And I don't think that there's a whole lot of reason why, unless there's a big lockup, like I said, that's coming to market, or there's any connection with what's taking place with Genesis, DCG, FTX. I'm talking about any major counterparty that, you know, might be bringing more supply into the market of XYZ coin. A lot of these won't have trouble putting in big moves up, even if they just end up continuing down, right? I'm not saying bottom all the way up. I'm saying something like this might lead to just that next lower weekly high, right? But the point is, at least you know if you've consolidated. If you're doing this for weeks, and then you did this, and then you finally pick a direction, and immediately you're back in, well, that's it. Like in the short term, that's usually it. And then you're looking back up here. Okay. I think we're going to wrap it up because we're on about an hour and a half right now. Let's see if there's anything else I want to touch on. Oh, I have Doge. So Doge is an example. It's back above that 20 period weekly moving average. But Doge is right into high time frame resistance. So you have this weekly level, right? Zoom out, daily, weekly. Here's your overthrow, and now you're getting a little lower high right there. So much more confident in Doge if it's able to retake these weekly lows, right? And then you're left with something that's kind of flagging up. So, you know, maybe we maintain this on the way up, and then we're above 11 and above 12 region again, and then you could be more confident in maybe something that ends up doing something like this and squeezing further up. But as far as it goes right now, putting in a lower high right at the first major retest of that, or second major retest of that level. Now, Doge is tricky because at any point Elon can come out and say that he's going to integrate Doge, and it seems like it's inevitable, right? Now, Link is another one I'm keeping an eye on, but locally it's starting to lose some ground. Just look at the these are right now. You have daily levels and the mid. So just clear areas of resistance where things were capped, the floor the entire time. And then this level right here that you're looking at, that's this little weekly shelf. If you just look back into September through October, it's pretty clear that the market was unable to close below 705. So I mark that out because if you have that kind of consolidation, market rejects at the highs, breaks through, and then again fails to follow through down, that's the first area that you're going to look. One sec, let me scale this a little bit better. To act as resistance. So if instead we make our way up, you had a brief consolidation there, and then we're above it, that's the area where I want to see hold as support. So you're not quite getting that right now. Maybe Link has further down to come, but as far as like short-term, mid-term, intermediate-term strength for continuation, the target of something like this holding would have been back up here, right? So we put on, have a naked POC. One sec. You have one up here. Let me just extend that. There you go. The point is, this weekly level, this should have acted as support, and then we would have been targeting something like this, sort of that 840, 850, 860 region. But instead, you're failing already after that rejection. So I think it's better to just operate at the extremes, especially when something's this tight. Getting involved in the middle is the stupidest idea because that's the most favorable in terms of liquidity, but that's where no one really has an edge. I think I covered everything. Litecoin, last one. Everyone's quiet though, you know, because everyone's dead. Litecoin, this is structurally, I mean, the last couple weeks, I mean, we're talking about literally the last couple, but again, there's 4 days left in this one. So last week and a half, not the best sign, right? You have this swing failure at the high, right? So clean consolidation, POC, so that's where you know most of the volume is up there. Failed to follow through, accepted back within the range. Looking like it's probably put in a high right now. But like I said, high time frame wise, it's reasonable to expect that so if you just map this out based on what levels were clearly involved in change, this is, let me turn off my moving average. I'm going to turn this off. Redraw some lines. So a lot of alts, just to be clear, I don't often talk about monthly levels, but we've been, so it's bad when we haven't done anything for months, so you have to refer to the monthly to point out how tight things have been. But most alts and even BTC, we're in a period of monthly balance, right? So after the low, everyone else is inside of us. I didn't want to say inside of us. That sounds weird. So breaking up and out of that, or breaking down, would usually be where you look for continuation, right? So same idea translates, though, if you lose that level. Where am I? One sec. So I just wanted to point this out. This is high, low, and then zooming out. Just clear where range highs were. Right, and this is even going back into composite before breakdown, and obviously much larger range down here. Point being, this is the first major change, right? First major change outside of this entire structure. Whether you're looking at these highs or this high or this little consolidation, we're reclaiming all of that. So from contextual risk reward standpoint, like, it's within reason to say that you want to buy this level on the retest, right? As close as possible. Now we got the retest. This is going back over a week now. So that's the most reliable one. So the most reliable one is the first one, right? The first pullback to the level. And that's why you always want to keep levels on, even if you're just an intraday trader or a scalper, because those are probably going to be the most certain, right? Those are going to be the stickiest areas where every kind of time frame participant can get involved. So you want more bids than not if you're looking to buy something. So could we come down and test it again? Yeah, but I would, at this point, you want to see that there's some level of development above here. So maybe we pull back into the level. Maybe it looks something like this where it looks ugly. We SFP right there. And then we're basing out above, right? And then you could start talking about, possibly whether you're looking at this on, we box this out on the dailies. Maybe you look at something like this. Excuse me. SFP that, whatever. And then you're back within that range. And then at least your target right there, your bias becomes the highs. And then maybe you're looking at that larger move up. Now, there's not a whole lot that stands in the way of that, right? But you did kind of already cover a good amount of that ground. And high time frame wise, the next major level, you could extend this all the way back. This whole level is a pretty, I'll get rid of all these just to give you an idea. This whole area is pretty sticky. But building above, right, would be a first good sign. And it wouldn't be the first time that the Litecoin did something magnificent all out of nowhere. All right, guys, that's it. I'm going to wrap it up. All right, so here's the deal. 4 invites to Arkham, $300 in BTC, broken down, $100 each person. That requires 7 comments to get picked. So I'm going to do that after this video. So by the end of today, you have to have a comment written in the comment section below, not in the chat. So this is the chat. You're all talking in the chat right now. But the comment section after the video is uploaded, doesn't matter what you say, right? All you need to do is be in the comment section so I can add this video and it'll randomly draw. And I will post those tomorrow. And you're either going to get BTC or an invite to Arkham. And that's that. Until next time, thank you for joining. Hit the like button. If you're interested in Phemex, the bonus right now I think is up to $4,400. There's a whole nother set of promotions that are coming out into the new year. I'm excited about those. One of the few exchanges that posted liabilities as well, proof of reserves, and I think that means a lot. But I will say, like I always say, trade exactly where you're comfortable, right? Trade where you're comfortable and never put all your eggs in one basket.